In my opinion, anyone can truly learn to invest. And when I say anyone, I literally mean anyone. But I think two of the main things that hold a lot of us back from investing in the stock market is one, the fear of investing, and just two, we are fearful because we just don't know what to expect. Now, investing isn't designed to make us rich overnight. What it is designed to do is to put our money to work and allow compounding to make our money grow and work for us through investing in the stock market. Now, with the right investment choices, anyone can become wealthy and even retire early, or just retire being able to have financial freedom or financial independence to do whatever it is that you want to do in retirement. The average rate of growth in the stock market is about 7%. However, when you carefully invest and you use the right methods and strategies to invest, it is not gambling, but it is an easy way to grow your money and become wealthy. Today, I want to share with you 3 things that you need to know about investing in the stock market that is going to make investing a lot easier and you a better investor. Rule number 1 when investing in the stock market is to expect a market crash. A stock market crash is a sudden or dramatic decline of stock prices. Indexes such as the Dow, NASDAQ, S&P 500, they will drop severely in probably a 1 to 2 day period. Now, you may be thinking, what could cause a stock market crash? Something that a lot of people fear will cause a stock market crash is a natural disaster, or something like what we're experiencing right now with the coronavirus. However, any unexpected economic event can also lead to a stock market crash. In the year 2008, we had a stock market crash that was caused by Congress failing to approve the bank bailout, and a lot of investors panicked because they believed that there was going to be bankruptcy in a lot of the financial institutes. Also, in 2000, we had another stock market crash, which was caused by the dot-com bubble. Now, usually these type of crashes, they occur at the end of an extended bull market. They can lead to either recessions or bear markets. But remember, rule number 1 is expect the market to crash at some point. Rule number 2 is the good news is the markets always recover. In 7 of 11 drops in the market, it literally only took 1 year for the S&P 500 to return back to all-time highs. It took 8 years for the market to recover after the 2000 dot-com bubble burst. Say that 2 times, it's like a tongue twister. And then immediately after that was the 2008 stock market crash, and it took the market only 6 years to recover from that crash. Now, the good thing is that these market crashes have become less frequent over time. Investors who are able to avoid selling during drops or crashes are the ones that are rewarded the most by the market. So just tighten up, sit back, and ride it out, guys. Rule number 2 is good news is the market always recovers. Rule number 3 is a positive and a more rewarding rule, and that is the market is the single best performing investment class over time. During a 20-year period ending December 31st of 2018, stocks had an average return of about 7.2%. However, bonds during the same period had a return of 5.5%, and cash during the same period had a return of 1.8%. So the fear of investing in the stock market will limit investors from gaining their best returns, as well as will also cause investors to miss out on the potential returns of the stock market, and that can be offered by investing in the stock market. Just remember that the market is designed to go up over time. Ignore the noise and just stay the course. Also, expect collapses, recessions, or disasters just like they've occurred in the past. They're going to happen again. But don't be surprised and don't panic. Rule number 3 is the market is the single best performing investment class over a long period of time. Now that you've heard these 3 rules, the reason that I believe that investing in the stock market is easy and anyone can learn to do it is because a lot of the barriers that were there in the past when it came to investing in the stock market have been removed. Anyone can invest in the stock market because, one, getting started is cheap. You can start investing with $20, $5, $50, $500, just any amount of money that you have available that you don't need or you can risk, because investing in the stock market can be risky. You can start investing today with that money. Number 2 is there are tons of online brokers that you can just download an app on your phone and start investing. Some of the brokers that I use are Webull, and they're currently running an amazing promotion where if you open up an account and you invest any amount of money, you get 2 free stocks and I get 2 free stocks. Also, there is SoFi Invest, where they allow you to invest in fractional shares, which is another good way for new investors to get started, because you can start investing in some of your favorite companies with as little as just $1. Again, that's SoFi Invest, and I also have a link in the description below where you can open up an account and you can use my referral link, and it does just help out the channel. And then as well as that, a lot of platforms and even the major brokerages now offer free trades, meaning that, again, you can start with any amount of money and it's never going to cost you any money to get started investing. So those are just some of the reasons why I believe that anybody can get started investing. Investing is easy, and if you just remember those 3 rules that I just went over with you, you have no reason to fear investing in the stock market. Now just remember that growing your wealth can be easy with the stock market. There is no guarantee and there are risks, but with those risks come rewards. All you need to do is regularly set aside some money, start investing, and once you're doing a little research on the companies, go ahead and just make sure that you understand picking stocks or ETFs or indexes, and then go ahead and start investing. Get started. The best time to start was yesterday, but the best time to start after yesterday is today. Again, I am Marie Brown. This is my channel, Minds in Motion, where we talk about personal finances, investing, and how to become the best version of yourself. Make sure that you hit that like button. Make sure that you subscribe and turn on the bell notification. All those things help to support the channel, as well as help with the YouTube algorithms. Thank you guys so much and have an amazing day.